This is the chart of Goodyear. It's a daily chart. As you can see, the stock faced some resistance in June and it was moving sideways. And here it moved out of the price rejection zone with an effort to move up bar on high volume. The next bar is again it gapped up on very high volume and it closed near the highs, and the stock went on moving with the increased volume. Normally what happens is when the stock breaks out, it is being marked up by the strong hands. You can see an increase in volume, and as you can see here, the volume has dropped off. This is where mostly the retail people are getting in. Here you can see again an effort to move up bar on high volume. Normally this is considered bullish, but one thing we should note here is as the trend increases and the stock moves up, we should be wary of increased or high volume, because normally this is where distribution takes place. The next bar you can see is with ultra high volume, and the close is in the upper mid, and as you can see, this is a potential buying climax as indicated by the ultra high volume. The VSA-2 is already giving an indication potential buying climax. This is a warning signal. Of course, it is not confirmed. The next bar, as you can see, it opened above the previous close, but it was not able to make much headway even though the volume was high. So that is again indicates weakness. And the bar marked D, you can see it is an upthrust bar on high volume, though the volume is lower than the previous day, but this clearly confirms that this bar marked B is a buying climax. This is also a 2-bar reversal pattern, and the next bar marked E, which is again a down bar on above average volume, confirms the weakness, and the next bar, which is F, the down move continues, but as you can see, it took some support from the short-term EMA and it is closing on the lower mid area, so it shows some support is coming here, and because of this support, the next day it gapped up, but it was not able to sustain that higher move and the supply dominated, and we had a close down here indicating supply is dominating. What followed is a weak move where the price is not able to make much move, and there is also clustering of the closes, and the spreads are very narrow. So, and the volume is already dropped a lot. So this is clearly indicates that there is no demand, and at the same time you can see there is no supply as well, or supply is not overwhelming to push it down, so some amount of distribution is still taking place here. And in bar J there is an attempt to move up, but again the price was not able to move up, so indicating presence of supply. Already, as you can see, the long tail here, that the supply did try to take it down, so this again has to be looked at with caution. The next bar is a down bar with higher volume, and it clearly indicates the weakness. And here there was a big gap down. The stock opened well below the last support zone here. There was an attempt to move up above the last support zone, but that did not succeed, and they dropped back and closed in the mid. That clearly shows the weakness, and this was a large support zone, and if anybody in trade should have exited by this time. And as expected, the stock moved down, and you can see the volume dropped off, and the whole drop was on very low volume, indicating there was absolutely no demand, and the price could be easily dropped without much effort. So using VSA, we had all the indications that the smart money was ready to mark down the prices, and this was our last chance to get out with profit or minimizing your losses. Hope you learned something about volume spread analysis in this small study. Thank you very much.